day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, September 5th, 2019. So here we go. Back-to-back news on China. Yesterday we heard about Hong Kong getting something of a reprieve, although you got to look this weekend to see if the protesters hit the street. One of their 5 demands was met, and that's great. And the extradition is off the table. Now the question is, those that were arrested during the protests, my guess is if they're not going to be charged, if they're let go, no records, I think this thing ends. But we'll see if I'm right or wrong. But they claim they're going to take to the streets. Then we heard when we came in today that the U.S. and China are setting up their 13th round of talks set for October. So now the market talk is, gee, we have October 1st, a set of tariffs about to hit. Does the president go ahead with that or not? In other words, President Trump. I was on Fox Business News and I said, I don't know. It depends, I guess, how the talks go to a degree. If they're going to proceed at the beginning of October, and remember, we don't have a date, maybe he does that and says, I'll wait and see how things go. I don't know. He's very capable. Some people are trying to predict it, others aren't. Then we get the European Central Bank announcement next week. And then, of course, the 17th and 18th, we have our Federal Reserve. And tomorrow morning, you're going to have jobs data. Wow, an awful lot of stuff. We saw ISM data come out today. Well, today, I guess we were looking at the service sector data versus industrial manufacturing is the right way to phrase it in the simple terms. And I didn't like what I saw, and a lot of people did, but I still don't see the manufacturing side in America picking up. I see the service side. Some people think that's where we're at. I don't see the jobs coming back that the U.S. thinks it's coming back from this Chinese-U.S. trade war. I think they're going abroad, and that's where they're going to stay. And the question is, do we get price pressure? In any case, it doesn't matter what I think. The stock market up 329 points, up 33 in the S&P. NASDAQ up a whopping 132, and up in the Russell 23. Where do you think the markets went to today? I'm going to show you Bollinger Bands, and you take a look at them. Gold. This was a crowded trade along with silver, I guess, is one of the ways to look at it, and bonds and notes. Crowded means a lot of people getting too one way in the market. People just buying silver thinking it's going forever. I'm not saying it has to drop a lot more. It was down nearly $1 today an ounce. That's quite a bit. The gold market, that area 1560 we've talked about, if you look at the metals update, you'll see that that's worked out. But you didn't go anywhere in the foreign currencies. And in the pound, a little more of a rally. Why not? Boris Johnson hasn't won anything at this point. And it looks to me as though they're going to go hat in hand asking for another, the Brits that is, looking for another 3-month extension on Brexit. In any case, in the S&P, we had this big correction, as you know, going on. This was the week of August 23rd. The resistance was back at the 18-week average. We stopped there temporarily. Then, as it turns out, we punched through this old high, and that's where we're at right now. So for the week, we're up 47 points, and certainly the market has gone from 30, 24.50 on a weekly chart of closes, 28.55. So let's call it the market went there, 170 points or so, and we've gotten a nice bounce about halfway of that. Okay, we're still not through those old highs of 30, 24.50 on a closing basis. This chart looks pretty darn good right now. The market snuck itself over this resistance point that it's had, and it was able to close over. It was able to close in the top part of the range as well. So what that does is it keeps in place. I'll take today's action off. You had coming in higher lows, higher highs, so we kept stalling out here. You did punch through it. So the swing line stays where it was at 28.89. The market's up and away. When I put moving averages on, you punched through, and let me come back away from today. Yesterday you got over that 100-week, but again, you were trading in between the past 2 days prior to that, the 18 and the 100, and sort of sitting there. With the news overnight, the market was able to punch through. If the market punches through, I'm always looking to see where is a Bollinger Band. And the reason is that I look at the first challenge of a Bollinger Band, be it to the downside or upside when it appears on the chart, is one of the areas pros like to take money off, especially when you get this wild swinging type market. This is where the market's number was, 29.70. is the Bollinger Band. You finished 29.72. I'll stick with what I know. I still think the pros took some money off the table there, and that's what held the market back today. On support, you're still looking at 29.16 to 29.01 and a half. When you look at momentum, you're overbought. So what we have is a market in an uptrend, came back, and it's taken a long time since in July that it got up to a Bollinger Band, hit it, and I think pros took some money off the table. And I know most of you are going to say, nah, the market's ready to run, China, blah, blah. Take the name off the chart. That's the first time it hit it, is all I can say. NASDAQ, let's take this off. You have a market that's getting overbought, in overbought territory, with a 76 reading in stochastics coming in, very similar to the S&P. Higher lows, higher highs. Yesterday you were sitting here, and we've had this resistance zone right here. You can almost visually see that. Today's action, you kick up. The Bollinger Band is at 78.43 3/4. You finish 78.55. You're pretty darn close. Can you carry out of that? It's going to be the big question for tomorrow. I'll stick with what I know, in the sense that what I teach is, I think the first challenge of a Bollinger Band is where people take some money off the market, the pros. That doesn't mean you can't go higher, but that is a resistance point in the chart. Same thing in the Dow. Overbought, first challenge of the Bollinger Band. You actually tried to get to it right here. Remember that? This high was 26.55.59. You just missed 26.580. Didn't quite get there. Fell back to the 18-day average. Today you hit it, and the market finishes 26.701, about 14 points over it. That's my point. The first time you hit it, it acts as a resistance zone. And at today's highs, I'm sure people thought, oh, it's just going to keep running. Well, the market gave back 140 points and came back to finish there. Are we in an uptrend? Yes. Are we overbought in these markets? We are. Have we hit some upside targets? I hate to say it, but we have. In the Russell, yesterday, coming in, and these videos are there for you. I don't predict markets here. That's not what this tape is about. This video is all about talking what's on the chart, not what I think is going to happen. I'm not saying it's going up or going down. I do that in my morning videos, as you know. What I do here is we're talking, you got a market stuck at the 18-day average now for almost 4 days in a row. You have momentum that's sort of flat. The trend is up. The bias is down. If you clear that high, you've already still got the trend up. So the real resistance isn't here. It's between the 200-day average and the upper Bollinger Band. And that's where you reached at today, and that's where the market sort of stalled out. Let's assume it can run again. You have another resistance point above you, unlike the other indices, the 100-day average at 1540 and 75. So I see this as a general resistance area. Unlike the other indices, this one is not overbought. So that's a prettier picture, but it's still in a resistance zone. In the VIX, let's take this off. On the chart coming in, lower highs, lower lows. Momentum pointing down, bias down. Two levels of support. I haven't said this in a while. It wouldn't surprise me if you hit the lower Bollinger Band that the put writers come alive. Today you got down to the 100-day, you did not hit it, but I still wouldn't be surprised tomorrow if put writers aren't looking to come in against that, hoping to get back to the 18-day average. Not a trade recommendation, but I often say that if you come up, you got to be careful. Writing a call has more risk to it than writing a put. When you're down at 15, to get to 8 is a whole different world from down at 15 to get back to 30, doubling the price. Very different. The market moves up because 15 is a historic low number. That's part of what I teach. Well, it wouldn't surprise me. We'll see if the market does anything. You got Friday coming up. Are you going to get any profit taking in the markets? Because you've had a heck of a run. This is what you call a crowded trade. We had been talking, you, me, other people, how low are interest rates going? Not could they get a correction. The chart pattern coming in had one of lower highs, lower lows. But the bias is up and momentum is overbought. If you take out this low and you get under the 18-day averages, where you can get interesting. You did that today. Can you reach for the lower Bollinger Band? Of course you can. The trend is down, the bias is down, and momentum is turned down. That number is jumping each day right now by about, if you look at it, 13, 14 points. If it does that tomorrow, it's going to be in the 162.20s. So we'll see if the market can get there. Don't know if it will or won't. We'll see what happens. 18-day average of closes, temporary resistance. 10-year note. Momentum down, but you had been overbought. Not an embedded reading, just overbought, fighting at an upper Bollinger Band without a trend. Lower high, lower low. We know the resistance, support theoretically, back to the 18-day average of closes. Market fell there today. It's still, unlike the bond market, which has lower highs, lower lows, this market doesn't. So the other market's more bearish than the 10-year. In TLT, let's take off today's action. Lower highs, higher lows. I think we talked about that. Momentum turning down, but the bias up, and you're flattening out here. If you clear this high, I'm looking for the Bollinger Band. If you take out this low, maybe you get to the 18-day average of closes. You exceeded it, but the point is, if it falls any further, you've got some support in the lower Bollinger Band facing you. Dollar index finally retraced from fighting a battle at the upper Bollinger Band. It was 2 days in a row, actually 3 if you look. This day it was over that number, over it, then it started pulling back. Overbought, not trending. You've had a lower low and a higher high. Maybe it goes back to the 18-day average to regroup eventually. I believe that that's where markets like to do that, and we'll see if that is in fact the case. We know we went there. The question is, are we going to fall into this support area, or what's the next part of this market? In the eurocurrency, the first challenge back here of the lower Bollinger Band again. This first time you hit it since the 18. That's where I think pros were taking money off the table. Doesn't mean you can't go lower. You did go lower. Now you're getting the bounce in the market. So it's about zones. It's not, I wish I could tell you it's about an exact point. A lot of guys, I go onto different trade rooms sometimes. I saw one yesterday, I won't mention it. Man surrounded by 50 computers. He's trying to watch 50 markets. You got to be a human algorithm to do it. I don't see how you can do that. British pound. Here's what we know. It's impossible to predict, okay? What's going to happen there next? Is Boris Johnson going to the EU asking for another 3-month extension into the January timeframe? Is he going to come up with some trick to get something done for himself? So far, I've never seen anybody take office and lose, I think, 3 votes in a row as a new prime minister. So he's not doing a very good job of winning over Parliament. He's interesting, but I don't know if he's getting anything done. The market likes the fact that they're pushing things down the road, and you see that in price. That's what I'm looking at. You've gone from lower Bollinger Band, where if you're a pro and you took any money off the table, you're saying, great. Now, anyone that got bullish on this, I don't see why. Resistance, the upper Bollinger Band, we'll see what happens. I don't see a trend. I see whipsaws in it. In the Japanese yen, this market gave up its safe haven status a while back. It came in lower highs. I think, I want to be certain, this low was 93.83.5. I believe the next break low took that out by a tick. This low was 93.82.5. So that puts into place with this little bit of a rally. If you take this out, maybe you get to the lower Bollinger Band and you come up. Now, wherever that number is, could be a zone it goes. But remember, you are oversold if you come down. Now you've got the lower highs, the lower low. You're bearish, but oversold. Resistance right here. You'd have to take out this past high of 94.64 to negate the downtrend. It could turn the market bullish if it got over it. Or if it continues down, maybe it's the lower Bollinger Band. It decided to go down to the lower Bollinger Band. If it exceeds that by very much and picks up momentum, maybe it gets to the 100-day average. I think the odds favor the pros who are taking money off the table today. September Bitcoin. I told you I would change the name right yesterday. Got it in here. This market is no man's land. You've got a higher high, a lower low pattern. Seems to have just stalled out temporarily. Now, what gets the market friendly is if you take out yesterday's high And that number was 10,965. Why? That could set up higher lows with a high over that, and wherever that upper Bollinger Band is could come into play. Support, 18-day average of closes. Here's what bothers me on the long side. Forget that it's a Bitcoin on the chart. You're already knocking on the door if you try going up of getting overbought. You have a 68 reading. I consider anything over 70 overbought. In the crude, well, the market spent a little time recently back under this 18-day moving average of closes. When it got over this number, which was the high on a closing basis of $4.33, it came alive yesterday, and you continued that today. So is the market really a trend? Well, it has upside bias. I guess you'd have to settle over these numbers to say, especially with a pattern, I like patterns, that would have higher highs, higher lows. You're just sort of meandering back and forth here. Another play. Yesterday you got up, you challenged 60.96. The upper Bollinger Band is 61.02. Today you hit it for good measure and couldn't hold it. First challenge of it. So goes with the theme we're talking about in the other markets. What happened in WTI? Let's come back to yesterday, and that's all this is. If the market rallies, two layers of potential resistance, support the 18-day average, that's your resistance. Are you trending? No. You have a lower low and a higher high of today's action. And you just missed that area. You missed the 100-day average by 9 ticks, but I think other people were looking at that, and the market fell back in there. Problem is, it's more sideways action than anything else. And we understand, and I hope you understand, that if the U.S. and China did put down their gloves, so to speak, and they did something positive, probably benefit the energy markets. Problem is getting them to do that. In gasoline, it's whipping back and forth in here as you're just moving. I don't see a trend out of this just yet. And in nat gas, the market finished today at 243.50, down a little bit. You're right in that key resistance zone. So let's talk about my offerings for you, because I think you'll find them interesting. This is Modern Trader. And Modern Trader, they were, I think, one of the best magazines in the futures industry. They covered all these different areas with different brochures they put together. They gave me permission to still use them, and that's what I've done. I don't know that anyone ever ended up buying the company, as they folded, like so many in the rag trade, as we call it, did go out of business. But it was a great magazine. Different stories in here that I think you should be having in your trade library and learning about. One of the things I see, people always say, 10 rules. When I redo my things, and I redo them every few years, maybe every 3 to 5, I think I'm going to get rid of the rules. I think 10 disciplines is a better wording for this, because trading is about a discipline. I don't know any trader that is always right, or frankly, that's a pro that's always wrong. But you have to learn to lose in order to win. And I know that's hard for a lot of you to understand, but you got to leave if you're making trades, different than investments, trades, and futures trading is what we call it, not futures investing. You better not have an ego. You're going to be wrong a lot. And wrong means learning how to control the losses. The winners, if you can learn to let them run, they seem to take care of the losers. But it all comes together in some of these booklets where it helps you to better understand. I don't know anything, including my trading course, that's going to turn somebody into an always winner. It's that simple. I imagine there's an algorithm out there I know nothing about, but when I think about algorithm trading, and I know I'm talking long, how could they all be winners? They can't. Go to our website, you'll see our free offers. It's that simple. You can click here to get to it. I'm Ira Epstein. You have a good day.